Well, welcome everyone. I know for those that are on the West Coast, good morning, and those on the East Coast, good afternoon. Welcome to our webinar on the Shuttered Venue Operators Grant as it relates to compliance issues. Just a few housekeeping rules. You are on listening mode. However, if you have any questions, please type your questions in the Q&A pane on the control panel. We'll try to get to as many questions as we can. If not, you can certainly contact us after the webinar and we'll be happy to answer any of your questions. You can do so also by raising the virtual hand. As introductions, I just would like to introduce myself, Stacy Gilbert. I am the managing partner of the New York City office at Citrin Cooperman, as well as the co-leader of the restaurant and hospitality practice. We also welcome Mark Kaplan, who is our practice leader in our music industry, who also represents a lot of talent representatives and will be able to give us a different perspective on how he is handling these compliance issues. Robert Gilbert is also the co-leader of the restaurant and hospitality practice and represents many clients that have live venues and is also an audit partner. And John Yasenio, who is our practice leader in not-for-profits and has an expertise in single audits and program audits, as well as many other types of audits. So he will provide us with the expertise as it relates to compliance. So let's get started. Here's the agenda on the topics that we're going to be talking about. We've got the background on the SVOG, different audit types and internal control issues, what you can use the funds on. We'll also get into what you cannot use the funds on, any of the risk considerations, and then of course we will have some Q&A. Next slide. So just by way of background, I'm sure you're all familiar with the grant. You've probably already received it, which is why you're attending this webinar in the first place. Yes, there was over $16 billion appropriated for the funds. I believe as we speak today, over $9 billion has been dispersed, and there's more to go. So there are invitations that are now going out for the supplemental awards for eligible recipients that have illustrated a 70% loss, or at least a 70% loss when comparing 2021's first quarter revenue to the same period in 2019. Next slide, please. So let's talk about the audit types and internal control issues. So John, I'm going to kick it to you. In plain English, can you explain to the group what exactly is internal control? Well, let's start with that and I'll give you a follow-up question.
So in plain English, I'll do my best, but it gets very technical, but there's a presumption when you receive these federal funds, whether it be under a single audit or a government audit, that the entity or the organization establishes and maintains internal controls over the federal awards. And what this means is they're looking for you to be able to provide reasonable assurance that you're managing the federal funds in compliance with the statutes, in compliance with the regulations, and the terms and conditions of those awards. And they want to be able to ensure that there are certain processes that are in place and certain controls that are in place that can be used and documented by the organization to demonstrate that ability. So that's what the internal controls is trying to outline.
Got it, thank you. So can you give, now look, the grants were in all different amounts. The audit requirements pertain to those who receive grants of $750,000 or more. Does not only include this grant, it would include all federal grants, we know that. So, but it still could be a small organization. So if they have a small accounting department, just a few people that are working in it, as it pertains to internal control, what would that mean for them?
So every organization is different. You have some that have more established controls and processes and some that don't. When I look at internal controls and I think of the objectives of internal controls and what organizations should be striving to do, it really focuses in three categories, in my opinion. It focuses on being able to provide assurance or allow that the transactions are properly recorded and accounted for. So do you have the ability to show and demonstrate that your financial statements can be prepared based on the underlying books and records and data that has been accumulated? Can you oversee and maintain the accountability of the assets that you have, whether it be cash or any other investments that you are holding? And can you demonstrate the compliance with the federal statutes, right? That's the first tranche. When I look at the second tranche, it's really related to the compliance and execution of those federal statutes and regulations. Can you demonstrate that you've materially complied with that? And then finally, looking at the third tranche, making sure that you've safeguarded those assets from losses. Now, how can we demonstrate that in the course of your operations? Can be done by having segregation of duty issues. You can have multiple reviews for some smaller organizations, ensuring that you have at least one layer of separated segregation so that the person that executes transaction doesn't also authorize and approve at the same token. Again, what the government and what others are trying to accomplish with internal controls is that there is a system of checks and balances into the overall use of the funds so that you'll be able to reassure the statutes that the assets are not being diverted for a cause that's inappropriate for the eligibility of the program.
Knowing that many recipients have never been audited before, and when we use the word audit, it sounds very scary for a lot of people who are not used to being audited. So can you explain what the difference is between a financial statement audit and a single audit?
Sure. So financial statement audit really is really just doing an evaluation of what they define as the subject matter that's in context. And what that means in plain English for this purpose here is your financial position, your activities and operations, or your compliance with the Shuttered Venue Program Grant. Audits can take many different forms, and when you think about it, they're used by various stakeholders, whether it be investors, whether it be regulators, government officials, agencies, and the likes. And really the purpose of a financial statement audit is to provide confidence to those users of the statements that the information is being compiled and appropriately reported upon so that they can make sound business decisions and investments into the future with you. So an audit is not like an IRS audit. It is not 100% review. We are not going to audit every single transaction or every single amount that occurs, but it does revolve around providing reasonable assurance. And that's important because what that means to you is that your auditors will come out there and sample. They will be looking at analytics. They will be looking at judgments and estimates that you've put into your financial statements. And there is some subjectivity in that. And that is why you'll never have 100% assurance in any financial statement audit. Couple that though, or contrast that to, I should say, to a single audit, as I think Stacey had mentioned. And that's very different. That's a different reporting mechanism that really is a means for those that spend federal funds. And the key word there being spend, it's an expense of amounts that are over $750,000. That's the bright line. It's really there to ensure that the grant money is being spent according to the purpose that it was given for, that it's really being complied with applicable laws and statutes. You're going to hear that a lot during the audits of the grants. And that it really is a totality of all the operations that have occurred throughout the year for this program. A single audit covers two different aspects. It covers both the financial statement aspect as well, which could include the financial positions and operations of the organization, as well as the compliance component, which reports on internal controls, actually reports on internal controls in the actual report itself, and the compliance of the program. And there's various mechanisms that go into that, but a single audit is a bit more onerous It's a lot more detailed than a basic financial statement, and it gets a little bit more granular depending on the types of programs that you have. So that's the basic difference between the two.
So based on the current guidance that we have right now, what should people expect to be required to submit?
I wish I had a great answer for that, but the answer is going to be it's still unknown, unfortunately. The guidance as it currently exists is that you will need either a financial statement audit or you will need a single audit. And there is no specific answer as to which one is a must. There is if you're a nonprofit, that I can tell you. If you're a nonprofit and you receive federal funds, more likely than not, you will need to do a single audit. The for-profit entities have that alternative for financial statements or single audits. What I would say is that there is an expectation that there will be some reporting that has to go out. So there are steps that you should be considering right now, whether it be reviewing your internal controls, whether it be establishing a trail of documentation and information for your expenditures, but there will be some reporting that has to be disseminated at some future time.
Okay, thank you. So as it pertains to the eligible costs, which we'll get into shortly, is there any guidance that can define when the expense is actually incurred? So as an example, if someone has an obligation to pay someone in the future, and they haven't paid for it just yet, how would someone understand that this expense has been incurred?
So the basic premise of the financial statements and a single audit is that you're following what they call GAAP, right? Generally accepted accounting principles. And that requires full accrual basis accounting. It's not special purpose. It's not cash basis or modified tax or any of that. It's full on accrual basis. What that means is that the expenditure, and remember, in the context of a single audit, it really is defined by what you expend, not what you receive or when you send the cash, but when you expend the funds. So in the context of an expense, does it represent a true commitment and a true cost of operation to generate future cash flows or future revenue generation of the business? If all you're doing is a prepaid, and it is nothing more than a deposit or an exchange of cash for a prepaid asset or some other item, doesn't flow through your operations. It doesn't flow through your statement of activities. And in that case, those expenditures would never be counted as part of the ultimate $750,000 that we're looking for until you actually are committed and host the events and pay out that in full for the revenue it's generating.
So John, that really means that that whatever that expense is has to really have occurred in that time frame, or perhaps where you really committed to it and you couldn't get out of it.
Right.
And that time frame being March 2020 through December 31st, 2021.
Right, on the first round, yes.
For the first round, exactly, right. Okay, so let's assume that we have an audit and we submit all of the paperwork. Do we know what happens after that? Whether everything we've submitted is acceptable? Do we have to return any funds? Do we have clarification on that?
So generally what happens with these audits is that there's a submission process, and there's a variance here between nonprofits and for-profits. So nonprofits have to make their reports available and submitted through what's called a clearinghouse. And that is submitted, and at that point, the government officials will be able to review the documents and provide information and feedback. For-profits are a little different. Again, for-profits are required to submit this information to the cognizant agency or to the provider of the grant and have them reviewed and inspected on. There's no definitive guideline or time frame as to when they will review it. And a lot of the questions as to whether funds need to be returned or not will depend on how the actual compliance is conducted and if any findings are determined. When we submit, or when you submit, I should say, your financial statements and your report, there will actually be a prescribed format that shows where the findings are, what it related to regarding the compliance, and what the actual cost that's in question is. And from that amount, the agency will have the ability to either perform additional inquiry, question additional amounts, or extrapolate that. Now, remember when I previously mentioned that we are only looking at a sample of items, the question cost that we provide in our report is not extrapolated. It does not represent 100% of errors that may or may not have been found in the population. So the agency will have some follow-up or questions for you if there are findings in the report.
Okay. And I believe we also have to tell people that they need to keep records for, I believe it's 4 years,
Right.
Beyond the submission. Okay, Mark, I'm going to bounce some questions to you. You're certainly representing many talent representatives, right?
And both a venue and a talent representative.
Right. Actually, we can move to the next slide. Thank you. And so, here are the listings of the expenses, which, in some cases are very specific and in other cases are extremely broad. So what are you doing as you represent these clients to track all of these costs and the funds?
Well, the first thing that we did was, obviously, by the time we got the grant, it was long after March 1st of 2020. So our first look at expenditures that we felt could fall under the grant, we took a look at our books from the period from March 1st of 2020 through the date the grant was received to see what had actually been spent and to look at those various costs and to see how they fit into this list, and we pretty much went down the list kind of this way, because, looking at the ones that clearly fall under there, payroll costs, which we've assumed include obviously salaries and bonuses and payroll taxes and employee benefits and those kinds of things, to determine what that total was. And I will say for us, and I think where none of us are completely sure about this, we, for the moment, backed out any amounts that were used to justify our PPP loans and any employer retention credits that we claimed on a payroll tax return, so that we were just using the payroll costs that were not somehow helped cover by another one of the programs. And then rent and utilities, payments to independent contractors, and then we would get into, even then we would look at state and local taxes, and leases and insurance before we rolled to, the broad area of other ordinary and necessary business expenses, because we all know that under that area, there are guidelines based on your tax return and what is an ordinary and necessary expense and is considered. But we tried to stay away from gray areas. We tried to be right down the middle so that they were clear expenses, office supplies, computer supplies, and tried to stay away from, let's say, business entertainment or expenses of the owner that might run through the entity, to try to avoid any question of that in the future. And then, to added up that total and saw where it stood in terms of the overall grant. And to John's thing about internal control, we looked at everything and made sure that it was approved properly by the rules that entity had in terms of who would approve. And in our case, our office handled all payments and everything, so we needed approval from the client. So we felt we had it there, but we also went back to the owner and went through, put together this whole package that had a schedule and had all the copies of the bills as backup, which we could easily hand over to the auditors when that time came, and had the owner go through it and make sure that he understood everything that was in there. And we discussed how we felt it fell under the use of funds under the SVOG rules, and arrived at a total. Okay, then we took that total and reimbursed it because we put the funds in a separate bank account so that they could be completely segregated, so that there would be a trail of exactly how they were used. And then we also sat and projected over the rest of the year the various expenses that we would continue to incur in all those areas, and to see that they would fit into the overall grant. So we even had an idea up front that we'd really be able to use all our grant funds. And as we go forward in our desire to use everything, once again, I think we'll stay as middle of the road as we can, so they're clear and straightforward, so that we don't end up in a conversation with the auditor over whether it does or doesn't really qualify. So the arguments are easy down the road when we come to that process. And then if we get, closer to the end of the year and we haven't used it all up, then maybe we'll expand our use of, our definition of ordinary and necessary expenses, while still trying to, toe a good line.
Great, thank you. So with all of that, how are you preparing for the audit?
As I said, we're assembling all that backup for all the bills. So as John said, in that basic audit, the auditor is going to pick certain expenditures and come to the owner and go, okay, let's see the backup for that bill. Do you have an invoice? Do you have approvals? Do you have enough documentation that shows it's a clear expense that should have been that was incurred during the time period, it's normal that you, as part of your regular business, have you therefore then use those funds the right way. As we go forward, we are trying to tighten up a little, or be making sure that there really is a good sense of approval process on every expense, so that the auditors will feel good about our internal controls, which are really our controls to try to make sure that we're not, that somebody's not embezzling money, or that we're not spending we're not paying money for expenses that don't really exist.
Got it. Okay. So John, now you're auditing Mark in this scenario that I'm going to throw out to you. So first of all, did he have to separate the funds into a separate bank account? Would that have mattered one way or the other?
So yes, it depends on if you've received advance payments or not. I think there's in the FAQ that the SBA put out, for the SVOG, I should say, there's a question there, I believe it's number 8, that talks about putting it into an interest-bearing account. And there's actually a requirement to put it into an interest-bearing account. And if there's any interest that's earned above and beyond a certain threshold, I believe it's $500, there's actually a compliance requirement to remit that back to the Department of HHS, I believe it is. But again, so there is a requirement to separate the funds. Now, how you use the funds or where you spend from is not necessarily an issue. It's more about having it in that interest-bearing account at that point in time. Again, that's only on the advance payment. Reimbursement payment generally doesn't meet that.
Okay, understood. So would you advise Mark to do anything differently? And when should he start preparing for the audit? Clearly he has started, but for those that are listening.
Well, I say this to all audit clients, the sooner the better. It's always better to be prepared early on in the stage and anticipate where there could be potential issues or error or issues that might need some enhancements or augmentation. I think what I would say to Mark, and we've had these conversations as well, is to make sure that the policies and procedures that you have in place are truly reflective of what you're doing and how they may or may not need to be tweaked for federal funds. Because again, this might be new to everybody. So the procedures that you had in place from an internal control perspective might need to be altered or changed or enhanced as a result of these types of things. I think looking at your financial reporting systems, a lot could be done nowadays virtually, and understanding what type of IT software you're incorporating and using. How is it compiling the data that you're going to base your financial statements on or track the expenditures on is very important. Do you have separate codes that could be designated just for these types of expenditures to provide an additional trail that you can use above and beyond your basic financial statement audit would be a good option as well. And Mark hit it right on the nose. It's documentation, maintaining the documentation, whether it be in paper format or electronic format. I prefer both. In this day and age, it's great to have backup and great to be able to transmit, especially for those that do remote audits and may require you to scan or send the information in. It's really about documenting your thought process and your viewpoint as to why these expenditures are allowable or eligible to participate in these reimbursements and funds. Because again, an audit is not there to justify whether it is allowable or not. It's presumed that you have already anticipated that they are eligible. They are allowable under the grant agreements for reimbursement. We're there to corroborate based on your evidence to make sure that that's appropriate.
Okay. Bob, you've been patiently awaiting a question, so I'll throw a few to you. So John did elaborate and explain what accrual basis of accounting means when a cost is incurred, but you might want to talk a little bit more about that. And in addition to that, when do these expenses actually have to be paid for?
Right. So accrual basis accounting is really when an obligation to pay something for a good or service has already occurred. I think that's probably the easiest way to explain it. So an example that would probably be very relevant to this grant that we were talking through yesterday was within the FAQs, it says that a deposit payment on an artist or performer is an allowable expense, which that makes sense. The issue is that if the deposit really is just a prepayment for someone's goods or services that are going to occur at a later date, then that expense isn't necessarily incurred until that exchange happens. So let's just say in December of 2021, I put $100,000 deposit down on an artist to perform in February, and let's pretend the supplemental phase doesn't apply and funds need to be incurred by December 31st, 2021. If that performance doesn't occur until February of 2022, then as of the expiration, 12/31/2021, we're of the thought that that has not been incurred. You could have dispersed the funds to that person, but that's really just a prepayment and not necessarily an expense that has been incurred. So there really needs to be, there's two different things. There's when payments are due, and then there's when something is actually incurred because there's a fixed obligation to pay something in exchange for a good or service. And like John said before, this follows generally accepted accounting principles. So there's a lot of guidance just within the FASB codification that could be researched in more detail for items that are a little more gray.
Bob, let's say that deposit you put down was a non-refundable deposit.
Yeah, if the obligation is fixed and cancellation doesn't do anything and that money is gone forever, then I don't see how we could say that that's a prepayment. I do think that that's an actual expenditure, and I don't know how common that is. I mean, if I was paying somebody, I would probably want the right to a refund if I didn't get what I paid for. But yeah, I think if the obligation is that fixed, that does change the conclusion.
And I'm going to just jump in because someone asked a question in the questions that might be that goes to that, and they wrote like, would prepaying rent for a signed lease be considered eligible funds. So if I prepaid 6 months of rent at the end of December, would that count?
No. I think we all know the answer to that. So Bob, we see these lists of expenses in front of us, or use of funds in front of us. What should people know about as it pertains to these items? Especially the broader areas, what do people need to know? And I know depreciation is one of the things as well. So can you talk about that?
Yep. So I don't think I need to list out everything that's in these bullet points. As you can see, it is most operating administrative costs that any organization would incur. The one or a few items that I wanted to point out is I have venues that have unforgiven PPP loans. So they said, can we use the funds to pay PPP? The issue with that is you can pay principal debt payments as they're due if the loan is originated prior to February 15, 2020. So no PPP loans were issued until April of 2020. So there are 0 PPP loans out there that would actually qualify for repayment using these funds. So to summarize that, unforgiven PPP cannot be used as an eligible cost with these funds. If you're applying for employee retention tax credits on payroll incurred as early as March of 2020 through today, that's fine. The portion that you are not getting a credit for on those wages is eligible. So don't just rule out wages because you're getting ERTC on them. Do the math on seeing what you are not going to be, you would not be duplicating benefits from between wages used for ERTC and wages used for SVOG. Owner compensation is limited to 2019's compensation. So you have to know what your earnings were in 2019 to get to that threshold. And in terms of the difference of what's costs being incurred versus paid, and this was confusion for several months, but they finally clarified it. The costs need to be incurred by December 31st, 2021, unless there's a supplement, unless you receive supplement, then it's June 30th, 2022. So they need to be incurred by either December 31st or June 30th. And they need to be paid within 1 year for initial grant or 18 months for a supplement grant. 1 year or 18 months from the day you receive the funds. So there's a huge difference in most cases. I mean, no one received these initial grants until summer of 2021. So there's a big difference between when someone needs to incur the cost versus when they actually have to pay it. In many cases, it's going to be 6, 7, 8, 9 months. So hopefully that, hopefully those items bring some clarity to some of our listeners.
Yeah, and as it relates to the ordinary and necessary business expenses, Mark touched on this as well. Can you also touch on that?
So ordinary and necessary, they are referring to the IRS definitions. So a necessary expense is one that is helpful and appropriate to your trade or business. Does not have to be indispensable to be considered necessary. So there's really a justification that in order to operate my trade or business, I need to incur this expense, or this expense helps me operate my trade or business. The advice I think we would all give is the deeper you dig into that, the more gray things could get. And you're probably going to save some time if you stay away from things that could be subjective, like the country club due, or the things that are a little harder to argue that you need them to operate your trade or business versus the things that are more obvious, like the rent and utilities and payroll and things like that. So yeah, the definition follows the IRS definition, but clearly some subjectivity to work through.
So, Mark, I'll ask you this question in terms of best practices, because you've pretty much been living this for a bit of time now. So we obviously, and you mentioned this early, we started out in a period prior to actually receiving the funds. So there's some, reimbursement, and then of course there's, the future incurring of expenses after it's already been funded. So what are the best practices that you've been going through that you can share with others in terms of how are you reimbursing it and so on?
Well, as I said, the first round of it was putting together a list and by going through the books and looking at what was incurred in that period and coming up with an amount and then assembling the backup for it, So I think that, and that took several weeks. So there's probably another little round of reimbursement to do also. And I think truthfully, as we go forward, there may not be that many bills we paid directly out of the funds, out of that bank account, because we did put everything into an interest-bearing bank account, that it may be that we'll have the company incur a month's worth of costs and then do a one-time reimbursement, but there may be some bigger expenses that are just clear that we may pay directly out of the funds. But the key is to really be making sure we're assembling backup. In other words, when the auditor comes in and he says, hey, that expense on your books for that, you don't want to go, oh, I can't find that bill. We have a good system set up because we're keeping the books for these clients where nothing's getting paid without backup anyway. But that's really the key. And then looking at it, go, is that backup clear? Will an auditor who doesn't necessarily, because there are specialized audits, so that auditor is not probably going to have a lot of experience with our businesses. Am I going to easily be able to explain to them why that is an ordinary and necessary expense in my business?
Got it. Okay. So can we move to the next slide, please? So I won't get into this. This is actually a small list, which is always good, of what you cannot use the funds for. So just for your information, do not go out and buy any buildings, make investments, political contributions, or any other prohibited by the administrator, which I'm sure was in all of the paperwork that you've already read. Next slide, please. Risks. Okay, so unfortunately, we always have to talk about risks, especially as it pertains to audits. So John, can you just walk us through what those risks are and how concerned should everyone be?
Well, again, taking on funds that require audits in and of itself is something of a risk and concern that others are reviewing it, whether it be an investor, whether it be a regulator or other third party. When you think about single audits or compliance audits, you have the added layer of being held to a standard from an internal controls perspective, as well as to a grant agreement that was filed, and very stringent rules and regulations as to what can be used and what can't be used. So when we think about the risks that you face, you face multiple risks. You face risks at the fund level. Funds may be withheld, may not be distributed in a timely fashion to you because the amounts were not deemed appropriate. You may face the potential for take back, as Stacy mentioned previously, where the report might highlight certain inconsistencies or inappropriate use of funds from a sample and may subject you to further scrutiny from the agency as to whether additional funds are necessary to be repaid back. You may be subject to suspension or termination in the program or future programs that the government may be offering. Again, I know we're talking about the SVOG now, but think about all the other federal programs that have come about during this crisis and pandemic that we've been in, whether it be PPP or EIDL or any of the others. having reports that agencies have seen that show poor internal controls or question costs or amounts that are not being handled appropriately put you at exposure for participating in future federal grants if they do come about. The government has rights and the agencies have rights under legal actions to take those to the organization. So there are risky parameters that come about from this. The biggest issue you face is a reputational issue, right? When you think about it, this is now being put out publicly to a third party, to an agency, to others. And the reputational harm or damage it may or may not cause to the organization is something that needs to be dealt with, whether it be for the current immediate future, or it could be for events that might occur into the future, whether it be participating in this grant or in some other grant in the future.
Okay, so I definitely want to leave time for Q&A, but before we get to that, can I ask each of you if you could pick the most important issue that everyone should kind of take away from this? What do you think that would be? John, I'll start with you.
Most important is to really have, and I know it's hard to do at this point in time because there's a lot of moving guidance and uncertainty in here, but really is to understand the rules and regulations that you're participating in, and ensuring that you have good understanding of what's expected of you as an organization. Although you can't prepare for the audit right now, you can be putting in place mechanisms and controls and other items to help you not have to have a fire drill at the end. So that would be my takeaway from this.
Okay, Mark?
Yeah, I mean, I would kind of say the same thing. You want to be making sure that you're documenting everything. You want to be making sure that you're trying to stay, as close to the middle as possible and away from the gray, and you might want to do some projecting of what you think you're going to spend in the time period and incur, so that you know what you're walking into in terms of the ability to use up all the funds or not.
Bob?
Yeah, I would. A lot of venues weren't able to incur any costs for many cases, 15, 16 months. So I think we really need to map out what the numbers look like beginning March 1st, 2020, and going forward into either December 31st or supplement through June 30th, and see what that's going to look like, what you can use for these costs.
Great. Okay, well, thank you. So let me see if I can find some questions. Oh, we have quite a few, don't we? I'm kind of going backwards. Okay, a follow-up question to expenses incurred. Are you saying if we have tour expenses for flights, buses, et cetera, in 2021, but the date the flight tour isn't happening until 2022, would that count? Mark, you want to take that?
Yeah, well, I would say, I think that goes back to the earlier question about the deposits, and this question has been raised to me. And I think the answer is, if you have made, if it's flights and you've made non-refundable fares, but they could be changed, I think it's a gray area. So I think until you're confident that those expenses are going to have to be paid no matter what happens. What if the tour cancels? What if you change venues? What if you do that kind of stuff? Until it's really fixed, you're probably not, I would probably not be looking to include those in my numbers.
All right, so kind of leave those for the end.
Yeah, exactly. And then you can decide,
Right.
I'm going to pay that guy, I have the money, I'm going to pay that guy, and I'm going to let him be paid whether or not the show actually plays or not. So that may be a move you make with your crew or something like that, so that you want to try to use those dollars to help people, but you've got to really use them in a way that you're not going to get them back.
So a couple of questions on owner compensation. First one that I'm seeing is if an owner who's also an employee also made an additional $400,000, made $100,000 annual salary, but also made an additional $400,000 in owner's compensation, referred to in the question as company profits. So perhaps that's a partnership or something like that. Is he allowed to get the entire $500,000? So, I mean, I know how I would answer it, but Bob, do you want to get that one?
I don't think there's a definitive answer on that. It really just cannot exceed compensation that the owner received in 2019. So I would think that a shareholder distribution and a W-2 would be grouped together, but we don't have anything authoritative that concludes on that.
Yeah, and my feeling it's not so much whether someone can be paid a certain amount. It's what you're using as eligible use of those funds. So if you had profits after you set aside the grant funds and what the grant funds were spent on, there's nothing that says that you can't pay yourself. Would everyone agree with that?
The kind of what goes in the opposite direction, though, is that the guidance does say that a sole proprietor would not use the funds to pay themselves. They said it would use the funding for non-payroll costs such as payment of rent, utilities, scheduled debt, maintenance fees, taxes, etc. So they're answering the question about how someone with no payroll would follow the program, and they're saying that they would use the funds for non-payroll costs. So it's kind of contradictory to our thoughts on, business owner receiving profit distributions or shareholder distributions whatever to themselves.
Right.
That's
And
what I'm
so
saying. I don't think there's a definitive answer on that right now.
right. And we're not sure in this particular situation, sole proprietor or something like that. So, okay. Are federal payroll taxes such as FICA and Medicare an allowable use of funds or only state related? So they're obviously comparing this to the PPP.
Yeah, the list does say state and local taxes, but I don't see how federal payroll tax wouldn't be an ordinary business expense. So I would say that it's eligible, even though that they didn't particularly list it out.
John, do you have a different feeling?
No, I think that's right. I mean, there's nothing definitive other than the state and local taxes and the FAQ that Bob was mentioning. But there is, when we think about it and I could speak more to it from a single audit and nonprofit standpoint, allocations of fringe, including benefits and including payroll taxes, generally are factored into grant agreements and grant contracts for reimbursement. So I would assume that it probably is an eligible cost.
Okay.
Right.
Again, everyone should understand that, there will be more guidance that will be coming out. It has continued throughout the program, and we look forward to much, much more. Another question. Can you advise how to approach idle funds for a company that received SVOG and also idle loans? It seems that idle restricts any distributions to owners while there is an outstanding balance on the loan, but SVOG allows payments to owners capped by owners' 2019 compensation. Does that mean that a business needs to return idle loan funds prior to spending SVOG funds on allowable payments to owners?
I am not aware of, an idle loan is 30 years. I am not aware of the inability to make payments to owners over a 30-year span. So I'm not sure where that's coming from. Perhaps there is, some fine print that says dividends can't be paid out, and maybe that's what we're talking about here. But I do think there's a way to get money in the owner's hands over a 30-year idle loan term.
Okay. If I contract, sorry.
I add one thing to that, Stacy. So
yes, of course.
That's an interesting perspective, not just from whether it's an allowable cost or not, but now you're getting into the fact that you have two federal programs that need to be accounted for, both the EIDL, the EIDL loan, and now the SVOG. They're separate compliance requirements and both need to be taken into account under a single audit. It's no longer just the SVOG now that's in question as to compliance requirements. It's now the EIDL. So depending on materiality and depending on a host of other things, you may be looking at one or the other or a combination of both. So, be careful when you have multiple programs and multiple funds. It will not be as clear cut as when you have just one program to audit compliance requirements for.
Great point. Great point. Once again, more guidance to come.
Well, on that, I know some of the questions say, if I didn't get $750,000, do I not have to worry about the audit? So the EIDL, the idle advanced, targeted idle, those are grouped into the federal funds received. So if that gets you to a point where you're spending more than $750,000, then it's the combination that would trigger an audit requirement.
And if the combination is under 750, even though you may not be required to have an actual audit or financial statement or single audit conducted, don't forget that the government or the agency, I should say, still has the right to inspect your books and records based on the grant agreements. Having internal controls is presumed to be in place regardless of whether it's tested. So internal controls, understanding that you need to track these items and have appropriate documentation is something that needs to be done irrespective of whether you need an audit or not, based on that bright line threshold.
Right. If I contract a music performer that receives a percentage of the door sales and they are owed over $100,000, will the excess money they are paid count towards the use of funds?
I believe there's an FAQ that goes into that and says that they would not be capped at 100. But why don't we move on to the next question? I could probably find that quickly.
Okay.
As I recall, to be honest, I think that first off, in the beginning, we weren't clear. We weren't even clear about owner's compensation and whether that would follow the PPP rules. But I believe the latest thing that I read, and FAQs, as we all know, have come out multiple times, referred to $100,000 per employee of the independent contractor. So until more guidance comes, there could be, once again, caveat, and the others on the call others in my group could go, no, it seems there's an opening there that if you are paying a band with 4 guys in the band, it may be $400,000. But I think as Bob and John said, and Stacy, we're all looking for some more guidance out of the SBA as they start to realize these types of questions that are going to come up. So obviously you're thinking that all I can use is $100,000, and anything over 100 might go into the bucket of, I didn't use up all my money. Can I start to go and make arguments about this money?
Right. Now back to what you said earlier, start with the clear cut and then end up with the gray. If you received under $750,000 and are a for-profit business, is it safe to say you only need to prepare for a financial statement audit?
Again, I think that question goes back to if you received under 750, there's no presumption of needing a financial statement audit. You need to prepare for potential inspection from the agency. You need to make sure you have the right policies and procedures in place to ensure that the funds are being appropriately spent, but you're not subject to audit. There was a question that followed up on that as to what level of internal controls, if you're not required to have an audit, you need to put in place. And that really gets back to how would you be able to explain to an agency or to an inspector or to an auditor, for any matter, that you have the right protocol in place to ensure that the funds have not been diverted, that they've not been misused, that fraud has not occurred at the organization, and that segregation of duty issues are there and appropriate to authorize and execute these transactions. So it really depends on an organization by organization perspective, but you need to be able to clarify and state that affirmatively yourselves as you start to work through the costs.
Okay, we don't have time for much more. I'll try and get one or two more. And my funds went into corporate business interest-bearing account, which will not reach the threshold. Do I need to pull it out and open a new account? So now we're dealing with hindsight. I guess perhaps they were mixed with other funds.
Yeah, so I think with this one, the FAQ talks about having it in an interest-bearing account. It doesn't necessarily say it needs to be segregated into a separate account. So as long as it's in an interest-bearing account and you can account for that and allocate the interest that may or may not relate to that portion, maybe a little harder to do than if it was segregated out separately. That's how I would interpret that question. So you're not required to have a fully separated account. It needs to be in an interest-bearing account, but be mindful of the requirement to remit funds over the interest level.
Okay, I'll do one more. Are you stuck to the outline of how much you planned to spend the SVOG disbursement? For example, we estimated a number for rent payments. However, rent has been reduced, but other expenses such as payroll taxes were more than projected. Can we use the leftover funds from the rent section to compensate for the extra payroll expenses?
That's a great question. I will tell you that in all the single audits I've done with nonprofits that have budgets that are approved, whenever you mix categories, you need to go back and have a modified budget or a modification done to the original grant agreement. I'm not sure if this is going to get to that level, but generally, if you're approved at a certain threshold, you should try and find costs that mirror or match those thresholds and categories. Being able to part and parcel out different categories or different expenses may be something that requires additional approval. You may need to check with the agency.
So one of the I happen to have looked at this just before our webinar, and one of the things that I didn't know was going to be asked, of course. One of the things that I did find is it said you do not need to spend the grant exactly as you indicated in the budget provided on the application. You may move costs between allowable categories. This does not require SBA pre-approval. However, you must only spend the grant in allowable categories, and all grantees will need to submit a final budget upon grant closeout. So it does look like there's a little bit of flexibility there. That perhaps this company would be in pretty good shape.
Yes, actually the video that everybody was supposed to watch when they got their grant said in it that we understand your budget could change. So before you do your final accounting, just submit a new budget and we're pretty much going to rubber stamp it.
Right. Yeah. So it seems that at least as it pertains to SVOG, it's a little bit different than what the single audit requirements generally do require, which is great for all of the recipients. Okay, we are actually right at 3:30. I know that there are more questions. We are going to try and get back to you. If you could reach out to us, you could see the resources on here. Any questions that we did not answer, or if you have additional questions, please email us at svog@Citrin Cooperman. Oh, there's a spelling error there. I just noticed that. Citrin, Citrin, Cooperman.com. And there are other links here and articles and so on. I'm sure many of you have already visited them. They do continue to be updated, so you should keep checking them. As we have said numerous times, clarification will come out, additional guidance will come out. But I think the most important thing you should all remember is do not wait to deal with the fact that you will probably need an audit, and you should reach out to a professional that can help you prepare for that audit before it's time to have the audit. I wish you all a very good day. Thank you to all of the panelists, and speak to you later. Bye-bye, everyone.